Guys, the U.S. markets not really sure of what to make of this Brexit agreement. We now need all of the European Union countries to agree to this, although, Teddy, I hear that Ireland, Dublin says we're fine with it. That, of course, is one of the rumors at Rumor Central. Is this what kind of brought the markets off the lows?
Well, I don't really know, Liz. I know this, though, that today's performance, and the day's not over yet, is very disturbing on a technical level because you had a very strong market. Right after the opening, we were up 200. We gave it all away. And, now we've been down over 300. I mean, these reversals, these technical reversals, these intraday reversals are very disturbing, very unnerving. And I think it tends to drive people to the sidelines, no matter what the news might be.
Mark Hamrick, we don't often hear Teddy that serious. In fact, I can't remember the last time you were that concerned, Teddy. So, Mark, we had a really good start to the session. Everything was in the green because we got a very tame consumer inflation report known as the CPI. And I looked at that and I said, well, this is good news. Must mean that the economy is still pretty much intact, but that, of course, the Federal Reserve, by the way, Jay Powell is speaking tonight in Dallas. That may change the whole picture tomorrow. But tell us what you think of this inflation number and why the markets liked it as much as they did.
Well, as much as this for the stock market is a bull market for neck braces and seat belts, I think Jerome Powell probably looked at this morning's data and said, you know what, my blood pressure remains steady. The Fed's on track for its December rate hike. We pretty much have that baked in. And then the question is, how many do we get in 2019? And the consensus right now is 3. I think that's still the best bet. The good news is that inflation seems to be under control. We know over time the Fed's been looking for inflation to get at a higher level, closer to its 2% target. Does it get above that for a prolonged period? That's the worry. But with this data this morning, with the year-over-year figures in line with expectations, the core just above that 2% target, we seem to be doing fine on inflation right now.
My eyes were just shifting because I saw the NASDAQ just turn positive, and now the Dow's down only 26. Todd, Colvin, what do you think is at the heart of this turnaround? Teddy said he wasn't sure and that he was disturbed a little bit by these massive swings, but could it be Brexit? And is that just one of these things that goes off into the ether and then we're still with the same trouble tomorrow?
Well, Liz, I think it's a couple of things. Yes, I do agree it was the Brexit announcement. We were all watching the S&Ps. They rallied strong. We were watching implied volatility in the Treasury market. It started to come off as soon as that announcement came out, and the worst fears weren't realized. They still have a lot of things to do, a lot of boxes to check in order to get their plan straight, and they have until March 29th to do it, which will be here soon. But ultimately, that was what calmed the markets. Now, let's look at the bigger picture. You talk about the oil price declines. That, I think, threw a real wrench into the equity markets, into the markets in general. And I think you've seen Treasury yields decline. You've seen risk-averse trades come back on the market, like gold prices rallying. All this is because of how quickly it happened. Yeah. And as Teddy mentioned earlier, these intraday swings are really starting to, I think, maybe scare investors. And they're backing off a little bit, I think, here as we head into year-end.
Oh, look at this, you guys. And I'm looking at this headline. The European Parliament's Brexit steering group says, not a rumor, says welcome progress on Brexit deal. And then there's this, EU, Brexit deal brings legal certainty on consequences of the UK breaking away from the European Union. Mark Hamrick, let's bring it back to the United States. If all of this good news starts to really kind of take hold here, you begin to see the Fed emboldened. I know you already talked about the Fed, but we just saw 30-year mortgages for fixed rates, the average of it, move oh so close to 5%. We can put it up on the screen so everybody can see the number. But how do you see this playing out if we start to see at 4.94% now for the 30-year fixed? What happens to the housing market, and does that ding the rest of the U.S. economy?
Oh, well, absolutely. We're seeing that right now, right? We're seeing the housing market slow. It's a function of worsening affordability between what admittedly is a slowing home price appreciation and some of those formerly red-hot markets now cooling off. But no, the housing market is seeing slower growth, and that dings the U.S. economy as a whole. But still, let's think about the fact that we do expect growth this year to be pretty close to 3%, which is above trend, and probably 2.5% in 2019, and that's good.
All right. Gentlemen, thank you very much. And Teddy, I need to see a smile before we say goodbye to you, because it makes me nervous when you get all fatutzt. There he goes. Okay.